join. YouTube live streaming will be momentarily.
Welcome, everyone. For those of you who are just joining us, if you want to maybe drop into the chat where you're dialing in from and what you're excited to learn about today. Ooh. How do we feel about getting started soon?
Yeah, we're good to go.
All right. That's great. Okay, great. Nice to see everyone's thoughts in the chat. Hi, everyone. Thank you for joining us. This is a conversation about climate fintech, which is a part of Accelerate Energy series. So Accelerate Energy series is a series of conversations that NeuroGenesis has put together as we explore the inquiry, how do we accelerate the global clean energy startup ecosystem to be diverse, inclusive, and economically empowering? And to do this, we focused in on different aspects of the ecosystem, from policy to markets to financial innovation to what it means to collaborate between corporates and startups. And today I'm really excited because we're going to be sharing a little bit more about what we see as when it comes to the role of finance and financial innovation and all the different levers and tools that we have at our fingertips to create the clean energy future that we know is possible. So I'll pass it over to Andrew first to share a little bit more about NeuroGenesis, and then we'll dive into the report.
Neha, fantastic. Thank you so much for the introduction. Hello, everyone. Super excited to be here to launch the Climate FinTech Report. Can everybody see my screen? Just give me a thumbs up, Aaron, if you can see my screen. Neha, awesome. I'm just gonna go ahead and make it full screen. Well, welcome everyone. Really excited. Hello, good morning to those calling in from the States, and I guess good afternoon for those calling in from Europe. My name is Andrew Chan, Program Director for NeuroGenesis. I'm just going to do a very brief introduction of our team first. First, I want to do a big shout out to Danny Kennedy and Christina Borsum, our CEO and CFO. They have been huge supporters of us along this climate fintech journey. And I also want to recognize Mr. Aaron McCrary and Yafu Zhao, who've actually been the true champions of putting together this report starting in March early this year. And so just a big shout out to everybody and big kudos to the Climate FinTech team. You'll be hearing from Aaron and both Yafu on the following slides. So just really quickly, NeuroGenesis, we're an international organization that supports clean energy entrepreneurs with funds, accelerators, and networks. We started in California, but now run programs in China, India, Southeast Asia, and East Africa. And as you can see here, where we operate around the world, we're truly a global organization. As you can see, we run programs with several different funders as well as corporate partners. As you can see here in California with the CEC, so we run programs focused on early stage startups with the California government, all the way to corporate partners like LG Chem and Hyundai Kia, which are very much focused on the battery and energy storage space. So our mission really is to support 100,000 entrepreneurs and ensure that they can be successful. How we support startups, we do it in 4 ways. First, we launch, for usually for pre-seed to seed. We run events, hackathons, launch pads, really to help them formulate their ideas. We also accelerate, helping startups build their business models. We also fund as well. So, we actually just opened our venture fund in Singapore, focused on Southeast Asia. We also do a lot of grant funding in California, New York, and elsewhere as well. And then finally scale up. And this is with our program, EV and Battery Challenge, and corporate partners like LG Chem and Hyundai Kia, where we help growth stage companies connect with commercial partners and customers. So without further ado, that's just a very brief introduction of NeuroGenesis. I want to pass over to Mr. Aaron McCrary to take you through the table of contents for the Climate FinTech report.
Thank you, Andrew, and hello, everyone. I know we have quite a few joining us from Europe today, so thank you for taking your afternoon, as well as China and the US, all over the world. Really appreciate all of the contributions to this report. It's been a true team effort and a distillation of over 100 interviews from 2020 with financial institutions, climate scientists, clean tech VCs, and of course, climate fintech startup companies. And we're extremely grateful to those of you on the call who contributed to this report and to this effort during such a complicated and trying year. Can move to the next slide. I want to also do a big shout out to the Hewlett Foundation for supporting this research effort and this work. This exploration of climate fintech is part of the Hewlett climate finance strategy stretching to 2023. And we're grateful that we can all work to move the needle to address the climate crisis in times like these. Indeed, this is a historic inflection point. 2020 will be seared in the memory for all of us, certainly from the COVID-19 pandemic, but also experiencing record heat waves, massive wildfires, hurricanes around the globe. It truly is a moment of reckoning and very special for all of us in different ways. It's historic also for the energy transition and for the flow of capital, which is financing decarbonization around the globe. Last year, for the first time ever, renewables made up the majority of the world's new power generation, representing a huge shift in how nations get their electricity. Spending on renewables is set to overtake oil and gas for the first time in 2021. So again, these are historic moments. We see the Biden $2 trillion green infrastructure plan, which currently hangs in limbo, depending on the US Senate. Boris Johnson just announced yesterday that the UK is investing significant capital in decarbonization. President Xi has announced carbon neutrality for China in 2060. And so it's really encouraging to see this movement over the last year. Now, while these gestures from investors and governments are encouraging, there is no vaccine for climate change. It's widely understood that mitigating a climate crisis would require a $3 trillion annual investment between now and 2050. And this is a massive figure, which is now motivating real action. There's many pieces to this puzzle, to this $3 trillion annual puzzle, including policy, action, financial product innovation, improving economics of clean energy, and for us, the focus of this report, the integration of digital financial technology known today as fintech. What is climate fintech? Climate fintech is digital financial technology that catalyzes decarbonization. This is a definition that we've worked on this year in an effort to incorporate all different kinds of innovations facilitating the mobilization of capital for this end. Now, fintech has already demonstrated its ability as a highly scalable disruptor to the financial industry. Digital technologies like big data and artificial intelligence have significantly increased data availability and transparency, and really changed financial inclusion and innovation. Climate fintech is simply the intersection of these elements of climate finance and digital technology. And these applications and platforms serve as really important intermediaries between all different stakeholders. So this report is really setting out to create an umbrella. It's sort of a conceptual umbrella of what the space is and what it might be comprised of. And of authors of this report that we've been working on all year, we want to play tour guide for you today for those who are interested. And the first thing to note is the chapters. The breakdown of this report is in 8 chapters. These are what we're calling the financial categories, and we'll be diving into these a little bit deeper during the presentation. So our research was guided by 4 questions. The first we just answered: what is climate fintech? The second is, what business models are successful in practice? The third, how do these companies grow? What support systems and stakeholders are needed? And fourth, how do these very important markets of China, Europe, and the United States compare in their climate fintech ecosystems? And to put it in the words of our CEO, Danny Kennedy, the tides of decarbonization have reached our shores. Now we must build the best surfboards we can and paddle out to ride these waves. So before getting into the nitty-gritty, we do want to make a nod and give some historic context to prior work done in this space. In 2017, the United Nations created a task force for the digital financing of the Sustainable Development Goals. Now, the SDGs, as they're called, cover all different types of subject matter: poverty, education, and we are actually honing in and focusing on 2 of the 17 SDGs in this report. Number 7, which is clean and affordable energy, and number 13, which is climate action. So there has been private research on fintech covering all 17, but there has not been a specific focus on these 2. There we go. Sorry, slight delay. So perhaps the most important takeaway from our research is that climate fintech has both upstream and downstream benefits. And when we say that, we mean that there are positive implications for both citizens and massive institutions. So these digital tools improve the financial decision-making of citizens and institutions alike, helping all of us to save, spend, invest, lend in ways which put the planet first. These technologies now make customers more conscious when they're shopping for clothing or deciding to travel. They assist asset managers in building more climate-aligned portfolios for their clients. They allow insurance firms to better analyze weather perils, and they give regulators better tools to monitor and measure carbon emission data from the largest corporations so they can hold them accountable to new policies and initiatives. Up and downstream is not meant to indicate more or less importance to citizens or institutions. only just to acknowledge the scale of capital flows. And we can show that on the next slide. So here we're scene setting a little bit. We wanted to show the key stakeholders in our mind, the people at the table in the financial system, and the pathway to integrate into that system as a startup. Now, decarbonizing the financial system is not an easy task and it's not an easy path, but these are the support systems at the bottom which nurture climate fintech startups. Universities, accelerator programs, private capital on the left. These are the initial resources which help to de-risk these ideas and innovations and ultimately lead to a conversation of integration through open innovation teams, open banking initiatives at some of the largest banks and financial institutions. And of course, the idea is to catalyze the mobilization of capital towards decarbonization. And so the end goal is to finance these types of renewable energy projects, electric vehicle innovations and research, et cetera. Okay, so this is sort of the homepage of our report, and we reference it throughout. And as I mentioned on the left, these are the 8 chapters in blue. So this is a mapping of climate fintech business models by financial category. So on the left, you'll see payments, banking, lending, and so on. And this page is really meant for 2 perspectives. One, you could be the CEO of a bank and say, these are my business units. These are our modes of operation. What technologies can help me decarbonize my business operations as a financial institution? And conversely, these are also business models that entrepreneurs can look at and say, I know about this. I know how to make this work. I know what the components are, and I can apply pressure on the financial system where they are missing these tools. So just an example, on the payments row, the first row, we have payments and consumer behavior, and there's within that the business model of sustainable e-commerce. So notice the blue and orange color under sustainable e-commerce. You map that to the right side, and you can see that big data and artificial intelligence are primary applied technologies which are used in that business model. So we've mapped these applied technologies throughout these categories and color-coded for you, highlighting the most common interactions. Another example on the left, going back to the blue, looking at the investing column, we have equity crowdfunding is the first business model. And you see the green color there. You trace that back to the right side under big picture frameworks, and you can see that they are using crowdfunding or a platform marketplace to implement their business model. So again, these are subsets. I know that Yafu had a few more that he was going to mention here, so I'll let him jump in.
All right, thank you, Aaron, and hello, everyone. So in terms of trading, we have various application in this category, from trading of carbon to trading of renewable energies, as well as distributed renewable assets. So you can notice that the most commonly used underlying technology here is the blockchain, because blockchain provides a immutable, transparent, and verifiable network to record these transactions, which is very important in the financial industry. And risk analysis is actually second biggest category that has the most second most applications. It's actually the foundation to support financing, investing, as well as lending. So we have ESG data analytics here, and also the climate global warming scenario analysis, as well as the physical climate risk analysis. Insurance tech application actually is somewhat based on the risk analysis. So with better modeling of the risk, insurance companies can come up with better pricing and claim on their product, and come up with some innovative products such as the solar revenue put that guarantees a certain revenue for solar power station. Regulation tech, also known as RegTech, is a very special application among all these categories. It is very high level, but has very significant impact. It applies big data, artificial intelligence to make the monitoring process more transparent, efficient, and lower the cost. So those are the main categories that we cover, and then I'll pass on to Aaron.
Great, thanks, Yafu. So these applied technologies on the right are not new, AI and blockchain. It's rather the application of these technologies in a decarbonization context that we're trying to investigate. All right, so over the course of the year, we have been building a database of these companies. And right now, our database is working between 250 and 300 companies. We're adding 10 to 20 every week, which is really exciting. Just sort of indicative of the level of activity that's starting to happen deliberately in this space. Again, we're defining all of these companies as digital financial technologies that are catalyzing decarbonization. And the list we've built is certainly not exhaustive, but some trends to note. First and foremost, 75% of these companies are early stage, meaning they've received 10 million or less in capital support or investment. There is enough of a sort of common ratio between this and growth stages to indicate this is a commercially viable space. So we really believe that this is an ecosystem that's ripe for investment, especially for angel investors and for VCs that are now starting to consider carbon and sustainability as part of their investment thesis. The financial categories with the most activity levels, and Yafu mentioned this earlier, investing clearly has a lead, a lot of robo-advisory and portfolio construction efforts happening there, followed closely by payments or / consumer behavior. And then a lot of activity in trading and risk analysis. Risk analysis does have noticeably the highest number of acquisitions. And there's a number of reasons for that, which we dive into later. Looking over on the right side, some of the geographic trends, Europe is in the lead. It's a very clear 43% of the ecosystem, attributed to a lot of the unified policy there, just a concerted effort around climate finance. The US is second there, and the other section covers Asia Pac, Canada, sprinklings around the world. Now, it's important to note that despite the fact that China is only showing an 8% representation here, the population that is using climate fintech is perhaps larger than the rest of these combined. We have a case, Ant Forest, where there's over 600 million users of this application. And so don't be fooled by that 8%. Let's go to the next slide. So just to dive into a couple of the chapters of the 8 chapters we have, one of them is banking. And we talk a little bit about retail banking, commercial banking, open banking, which is the sharing of APIs between fintechs and the banking systems. When we talk about this year, COVID-19 has really accelerated the shift to neobanks, banks which are entirely online. And this was a trend that was happening already, but has really accelerated over the last 6 months. So as neobanks gain customers and market share, banking giants have responded in the areas easy for them to fix, like lower fees or highest interest rates. But it's much harder for a JP Morgan or a Bank of America to untangle their business relationships with fossil fuel companies. And so this is an area where neobanks are a lot more nimble. They have a substantial advantage. They can offer ethical positioning. They can offer products and services which offset and decarbonize. And there's a very clear demographic shift that cares about these types of elements in their banking. So one of the case studies that we looked at for banking was Aspiration Bank. They've seen significant growth, especially over the last year. We had the pleasure of interviewing Andre Cherney, who's the founder and CEO. And they've done a really good job of creating this sort of suite of products and services which enable the customer, the average retail banking customer, to feel their carbon impact and decarbonize. They have an aspiration impact measurement, which lets people track their impact as they shop. They have a planet protection program, which offsets automatically any gas that you purchase at a gas station. They have something called Plant Your Change, which rounds up cents towards planting trees. And they've seen the highest rate of customer acquisition this year. Another chapter is investing, obviously super important. A lot of leverage of data now using artificial intelligence to improve investment decision-making. Investment in decarbonization has really exploded this year in ways which has surprised everybody. And you know, this is caused by regulatory pressure, product proliferation, the sort of changing shift in the climate education of the masses. And it's true, as Bill McKibben explained, you better hope that you weren't long on oil going into the pandemic because you lost your shirt. And it's true, ESG funds have really outperformed other asset classes this year. And we see this sort of idea that you can vote with your dollars in this graphic with the 27X. You know, you can take these menial steps in your daily life to decarbonize, but in moving your pension and moving your savings, moving whatever dollars you have to sustainable funds has an outsized impact on the planet. Just a comparison case study here. Swell and Open Invest are both turnkey asset management programs and have very different stories. Swell was actually an intrapreneurship effort from Pacific Life, which is an insurance firm here on the West Coast, and was actually one of the first impact investment platforms out there for retail investors. They had 6 different buckets of funds you could invest in, and they grew to several tens of thousands of users actually, and had tens of millions under management. But Pac Life was not willing to integrate the platform with their legacy insurance customers. They weren't willing to grant access to this potential massive customer acquisition effort. It was a younger demographic on Swell, an older demographic within Pack Life. And so eventually it became unviable and Swell went out of business. Now, in comparison, Open Invest is a similar model, but also using some of its own proprietary technology, doing dynamic indexing, and has seen tremendous growth over the last few years. Part of the success is that 70% of the business is focused on wealth advisors. They also have a platform relationship with Bank of the West. And we had a great interview with Josh Levin, who's the head of strategy there. He said ESG investing using technology is going to be the vanguard of capital allocation. Now financial advisors can hand a client an iPad and easily show, in addition to financial analysis, how many tons of carbon were avoided, how many trees were planted, and the gender composition of executive boards. I'll pass it to Yafu.
Great, thank you, Aaron. So in the world of investment, return is always associated with risk. And with the global climate change and the technology evolution, the returns divided from the carbon intensive activities are increasingly undermined by outsized risk. And there are two types of risks: the transition risk, which includes policy and legal risk, technology risk, market risk, and regulation risk, a reputation risk. And the second type is the physical climate risk, which is usually the sea level rise and also catastrophes resulted from the extreme weather by the global warming. So managing the investment risk of climate change really doesn't really necessarily mean fighting against the climate change. It means ensuring that your investment has the highest return despite of the climate change. And we have in the second category, we have observed a substantial increase in the sustainable investment because of the regulation pressure, superior return, as well as the need to avoid the risk. So these investors need the tools to assess the climate risk. Nowadays, the big data and artificial intelligence allow for superior analysis for ESG risk and impacts, because we have now more data to analyze, and also these tools will gather the data from satellite, from smart sensor, as well as some data from the social medias, and will be some of the data will be extracted from the form of PDF and even images and processed by artificial intelligence in a very short amount of time. So that's why we say there's a trend in ESG analytics startups, and both in all the regions in Europe, China, and the US, and in the past 2 years, and also say the financial incumbents are acquiring these startups. So there's an example, Miltech, which is Chinese ESG analytics startups, which is grasping the opportunity of increasing sustainable investment in China by solving for the issues around the ESG data availability and accuracies. So unlike the developed market, the listed companies in China usually voluntarily disclose the emission data. Only around 30% of them have disclosed the data. So tech startups like Miltech use alternative data sources, such as the website of regulators, as well as the social media, to expand the data sources. And secondly, they increase the data points from around a dozen to about 300 to increase the accuracy of the model. And most importantly, all of the process is done by artificial intelligence, which enhance efficiency and also lower the cost. So those are the highlighted categories that we covered in the report. So we also compare and study the market in different regions, which are the most important regions, both financially and carbon intensively. And firstly, I'd like to talk about China. So there are a few high-level observations of China. And number one, China has fewer climate fintech startups than the other two regions, despite its substantial renewable and green finance market. Number two, regulation plays an important role in this policy-driven and centralized green economic system. Number three, climate risk and ESG risk analysis are the most promising verticals, just like the other two regions. And finally, climate fintech startups play the role of enabler rather than disruptor. For those of you who are not familiar with the Chinese market, I'd like to give you some background information from regulatory environment to capital flow and also innovation culture. So in China, there's a top-down level design with local pilot tests to build this climate finance system. Since 2012, China has committed to tackling climate change with a national strategy to build an ecological civilization. And in 2015, the central government issued the integrated reform plan for promoting ecological progress to establish a systematic and complete institutional framework for promoting ecological process. And the 2016, the 13th five-year plan actually set out the goals for specific industries such as the renewable energies and electronic vehicles. And the upcoming 14th five-year plan, which starts from 2021 to 2025, are expected to have more emphasis on the renewable market as well. The 2016 guidances for establishing the green financial system really laid the foundation for the reform of climate finance in China, which set out rules for green bond, green lending, insurance, and other sustainable financial products. So in the following year, 8 cities in 5 provinces were chosen to have that pilot test, to have the experiment to establish the green finance reform, which also provided the initial opportunities for some climate fintech startups, such as Unit Inclusive, which helped the local bank, Huzhou Bank, to upgrade its green credit management system. And last year, the Green Industry Guidance Catalog have combined several standards with a better version aligned with the international standards. With respect to capital flow and stakeholders, China is now the largest renewable market in the world, and thanks to the high policies, which is really efficiently implemented in the economy. And now it accounts about for half of the solar market as well as the EV market. And in China, unlike the market in the US, bank loans accounts about half of the market, and which is also the largest source of the climate finance. Green bond is the second largest source and the fastest growing one as well. Last year, China is the second largest green bond issuer, and this year it is likely to surpass the United States and become the largest green bond issuer. And we are happy to have the green bond standards renewed this year to exclude the clean coal. So that standards in China is also aligned with the international standards as well. But we also find that the equity market in the low carbon projects remains very small. Additionally, foreign capital does play an active role in recent years as China lifted the quota for QFII, which is qualified foreign institutional investor earlier this year. And the inflow of this foreign capital has also brought the international standards of sustainable investment So many of the asset managers in China are gradually following those rules. About open innovation culture and startup ecosystem, China's economic miracle used to rely on the low labor cost as well as the massive market, but now the engine has gradually shifted to innovation. If you look at the data, the share of the R&D expenditure of China has increased dramatically in the past. It's from around 5% to 26%. And also the talents graduated from school top the #1 in the world. These are all most important factors to support the innovation in the country. With some big tech giants such as Ant and Tencent, they have dominated some of the innovations in the fintech areas, and they have their own ecosystem to booster this innovation. While on the other hand, the financial incumbents are rapidly catching up with this fintech innovation as well. For example, the China Industrial Bank, which is also the leading green bank in China, has set up a fintech arm, the CIB Fintech, to provide open banking and green finance services to the industry. And to look at some specific categories and applications in China, we find that the investment analytics, which is the ESG analytics, shows the fastest growth among all business models, which we mentioned earlier. And if we look at the ecosystem, which is the graph on the left, the climate fintech startups position themselves as the data provider in the whole value chain of ESG investment ecosystem. And climate fintech in the lending industry is likely to mobilize the greater amount of capital because China has already got around 10 trillion RMB of green loan assets. And these climate fintech startups has two business models to move the capital into the low carbon activities. One is to upgrade the bank's green credit management system, which is now experimented in the 8 cities, the pilot zones, and are expected to scale in other banks across the country. And the second business model is to use the blockchain to help the distributed renewable assets to get financed by the financial institutions. Regulation tech is comparatively a niche market, but it has really significant impact in China, as China has a top-down driven green finance market. While consumer behavior, there's a really successful case in China, which is Ant Forest, with around 7% of the population on the planet using this app and planted around 120 million trees in just 4 years. But startup in consumer behavior really needs to have a big base of customers in order to have the bargaining power to compete in this subsector. And now I will pass on to Aaron to cover Europe.
Hi, everyone. Can you hear me? Okay. Thanks, Yafu. I know we're moving pretty quickly, so I just wanted to take pause. We can try and address some of the questions that are in the chat now, or we can save them for the end. Andrew, what do you think?
Yeah, Aaron, let's wait till the end. We'll leave about 15 minutes for Q&A.
Okay, great. So just reiterating, the three regions of focus were China, Europe, and the United States. And looking at Europe, as I mentioned earlier, this was the region where we found the largest amount of climate fintech innovation. This is a result of collective policy action, and we found 43% of our 250 database to be in Europe. Now, another key learning is that a lot of these financial incumbents, the biggest banks, of Europe, Barclays, BNP, ING in the Netherlands. They have really robust open innovation teams and open banking initiatives. And lastly, you can't bucket Europe as one entity. Every country is different. Every country is nuanced. For example, you might find more intrapreneurship in Netherlands and more external entrepreneurship in Spain or Germany. So just quickly talking about the regulatory and political environment, in June of this year, the European Commission ratified the EU taxonomy, which is a framework across all the 27 member states that sets emission standards and holds financial institutions accountable. Soon thereafter, in July of this year, they passed the European Green Deal, $572 billion US dollars, 500 billion euros to develop clean energy resources, stimulate the market for emissions-free vehicles, develop clean energy resources, and invest in new technologies. The EU's executive arm also raised its 2030 emissions reduction target from 40% to 55%. And a surprise to me, at least, Boris Johnson this week announced that he was going to ban the sale of fossil fuel cars by 2030 in the UK, 10 years ahead of previously established decarbonization timelines. So country level, policymaking is also nuanced. In the Netherlands, you have the Network for Greening the Financial System. They actually chair that, and it shows the government's commitment to transitioning the banking sector and increasing the use of sustainable digital finance in the financial system. And of course, we're familiar with the Paris Agreement, which sort of serves as the beacon for climate policy around the world, and sort of sets the tone and catalyzes a lot of capital flows from the financial system in Europe. Just talking a little bit about capital flows, ESG investing in Europe has been around for a long time, and this groundwork is paying dividends. According to a US UBS report, family offices in Europe expect to have higher sustainable investment allocations than those in both Asia and in Europe. And retail investors are pouring their money into exchange-traded funds, ETFs, and thematic funds that are tailored towards the energy transition. European funds invested a record 120 billion euros over the last year. And actually last year in Switzerland, as you can see from this chart, there was a massive jump in sustainable investments to nearly 1.2 trillion, representing an enormous annual growth of 60%. So this is being taken a step further even. BNP Paribas in Paris is launching a thematic fund which now shorts stranded assets, shorts companies that are either sitting with significant stranded assets or have technologies that are outdated or insufficient to address climate change. So it's interesting to see the financial system advocating for transition so actively. Just talking a little bit about the innovation culture in Europe. As I mentioned, there is a robust culture of intrapreneurship in Europe, although to generalize across all countries would be unfair. Although Europe lacks a concentrated hub like Silicon Valley, its member countries have robust innovation centers known for fintech and known for climate action. So, for example, this photo is Station F in Paris. It's inside a massive retrofitted train station. And it's the largest physical startup facility in the world. Accommodates 1,000 startups. In Switzerland, Zurich is home to the F10 accelerator, which is renowned in the fintech space, and has Zug nearby, which is the cryptocurrency hub and sort of home base for all kinds of blockchain innovations and other cryptocurrencies. Climate Kick is a fantastic organization, accelerator organization with presence in more than 30 cities in Europe. It's financed by the European Union and is nurturing a lot of startups in sustainable energy production and climate resiliency. So as I mentioned, a lot of innovation in Europe is fostered within these financial incumbents. The Barclays Accelerator, which is powered by Techstars, is very well known in the fintech space. ING in the Netherlands hosts a fintech village. And so it's great to see these sort of concerted open innovation teams engaging with external startup companies, tracking a path to integration. And of course, there's the supplemental corporate venture capital arms of these entities, which will come in with supportive financing, whether it's strategic or financial, and help with the integration process. We did note, and that's okay, we'll keep it moving. Just to wrap it up, 43% of the ecosystem that we mapped was in Europe, as I mentioned. Quite a bit of exploration still around blockchain on the institutional level. Spain was the first country to fully issue and syndicate a green bond using blockchain and DLT technology. I thought that this stat, only 5% of the fintechs in Germany are delivering on the UN SDGs. It's super important to note and indicative of the wider fintech community. Germany is extremely progressive and active around climate finance and climate action. And if only 5% of the fintech innovation there is addressing the SDGs, and only 2 out of the 17 SDGs are specific to climate, that means that less than 1% of fintech companies around the world are directly addressing decarbonization. And in fact, it's probably much less than 1%. So we really want to encourage the sort of deliberate fostering of this ecosystem and thinking about this space. Let's see, we also noticed quite a bit of use of artificial intelligence and big data in asset management, and leveraging the sort of increased decision-making and data capabilities of those applied technologies. Just checking. Sorry, one second. So, as you all know, it's been a hectic year for the United States, and there's been a lot of components to that. Obviously, bungled management of the COVID pandemic, heightened racial tensions, reckoning with various social systems, and a very politicized electorate has sort of created this volatility. And interestingly, all of these challenges have provided fertile grounds for reflections and catalyzed record-setting impact investment. Another encouraging stat is that 79% of Americans now support the development and use of alternative energy sources, such as wind and solar. So the citizens of the states are becoming collectively more in line around this and more educated around climate science. And of course, despite the chaos, the United States still maintains its very robust innovation communities on the coasts, And there is this potential for a decarbonization renaissance if things sort of fall in place over the next year. So in 2017, the United States withdrew from the Paris Climate Accord. And obviously that was an unfortunate signaling to the international community. But what resulted was a sort of piecemeal response from states to keep up their push towards decarbonization. So a coalition of individual states formed the US Climate Alliance and continued to uphold the Paris Agreement. And over the last several years, despite the policies from the Trump administration, you have seen this shift in the economics of fossil fuels and the more economic models around solar, wind, et cetera, per kilowatt hour. So that has, despite the Trump administration's best efforts, really put renewable energy and electrification at the forefront of the financial community and investment interest. I just want to highlight the Biden proposed climate plan, which clearly is very much hanging in the balance and may not happen. There's a number of policies that are expected in the coming year, whether or not the Senate becomes Democratic. But he did propose carbon-free power sector by 2035, energy efficiency upgrades to 4 million buildings, the construction of 500,000 electric vehicle charging stations, among other components. So it will be interesting to see how much of those plans are implemented and executed on, but it could reposition the US as a leader on climate action. Just talking a little bit about money flows, capital flows. As I mentioned, this has been a historic year. The economics of renewable energy, I believe, has really sort of influenced this, as well as just this shift from private benefit to public good in the investment community, accountability by a lot of the financial institutions signing on to various treaties and accords, the principles for responsible investment, using the principles for carbon accounting financials. All of these have fed into massive movement of money. And actually, let me just, so investor concern over social and environmental issues have propelled approximately 24 billion of capital into ESG funds as of July of this year, which is a figure which already surpasses the year prior, just in the first 6 months of this year, and is a figure that suggests that more capital will flow into ESG funds in 2020 than the 3 previous years combined. So just to wrap up, the United States is in flux, but there is tremendous potential for this decarbonization renaissance. We've definitely noticed some trends from financial incumbents, institutions, acquiring these ESG analytics, transition risk analysis, climate risk analysis firms. Moody's acquired 427, Morningstar acquired Sustainalytics, and these sorts of geospatial mapping using satellites and sensors to help with risk analysis and asset pricing has become extremely popular. We still think that it's somewhat underdeveloped in areas such as water resourcing, and has tremendous potential for innovation there. As far as crowdfunding is concerned, we've seen more quote unquote sustainable crowdfunding in Europe. Whereas here in the US, it seems to be more popular to use these turnkey asset management programs that help you allocate into public equities and then do a carbon accounting of your impact that way. And people can get started for as low as $2,000 or $3,000 in investing in this manner. We think that, or we're seeing that consumer spending applications, which are tracking carbon footprints, are becoming more and more practical, more useful, increasingly integrated into incumbent banks. And this, I think, has tremendous potential over the next year. So we're excited about the US and what's to come, despite such a challenging year. All right, so just to wrap it up, there's a lot in this report. It's 100 pages. There's 100 and something citations, and we really do encourage everyone to sort of take it and use it as needed, use it in a way that's helpful to you. It's by no means exhaustive. Again, it's an attempt to build an umbrella, this sort of conceptual umbrella to think about climate fintech. Some key learnings or takeaways. Again, this is impactful for both citizens and institutions, so downstream and upstream benefits. 75% of climate fintech companies are early stage, so an opportunity there for angels and VCs to invest, to nurture that ecosystem. We believe that less than 1% of fintech solutions directly address decarbonization. And so we have a responsibility to nurture these innovations deliberately. With banks, if you're working for a bank or an asset management firm, this really means you need to advocate internally for open innovation, for open banking, for the use of physical and climate risk analysis in every investment decision. There's lots of tools out there that can help with the movement of capital in this way. We think that this is an important space because these are intermediaries. These companies are serving as the intermediaries moving capital from point A to point B. And if they also have a concern around climate consciousness, the chances of that money ending up in the right place is much higher. And it normalizes and educates everybody in the financial system to sort of think about having a positive impact. So I guess to wrap it up, for institutions, we implore you to advocate for open innovation efforts, directly exploring climate fintech. For investors and private capital, you play a pivotal role in de-risking these innovations and opening your Rolodex to help them find additional customers. For citizens, you're powerful when you're united and vocal, and a more educated population has the ability to create change at the highest levels of government and capitalism. And lastly, for climate fintechs, we believe you're in the right place at the right time. We're really thrilled by your work. We welcome your questions, your pain points, and we're really excited about the accelerator program that we're going to be building over the next few months to sort of turn this into a concerted effort in nurturing this ecosystem. So thank you guys. And yeah, we have the report. We just finished it late last night for you. So please go and check it out. I'm really excited to get your feedback. Again, this is not exhaustive. It's just a first stab. And yeah, Andrew, go ahead. Thank you, everyone.
Yeah, Aaron, thanks a lot. I really appreciate both you and Yafu really just taking it home. So I'll spend 5 minutes just sort of closing it out, and then we'll move to Q&A. So just as Aaron mentioned, we have the full report online and available right now. You can go to bit.ly/Nexus Climate Fintech. We put together a very simple sort of one-pager that includes, fill in your information, write in why you're interested in climate fintech, and you can go ahead and download the report. As Aaron mentioned, it is 100 pages long, so we don't expect you to read it in one sitting. But as you know, it's a sort of a journey, and it was sort of our objective today to be that tour guide, just to walk you through the map of this report. So sort of in summary, we talk about what is climate fintech, how we define it, the ecosystem, all right? And then we also include all the case studies to back those different financial categories. And then we also dive into the geographic observations of each of the countries, talking about regulatory and political environment. We talk about the capital flows, and we talk about the open innovation ecosystems. And so it covers a lot, but again, by all means, not exhaustive. And so we can also send this copy to you with a follow-up email. That's not a problem. We also really want to just big shout out to all the people who contributed to this report. We spent about 6 months interviewing folks all across the globe. And it was truly been a tough year for everyone, but I'm glad to see that everyone's got time and space to rethink about how we can develop cleaner energy systems and how we can divest from fossil fuels and divert more money towards clean energy projects. And so really excited to share this with you. One last thing I do want to share is that, as Aaron mentioned, our goal is, so we've completed phase 1, which is really the mapping, ecosystem mapping, right? Over 100 interviews, now we've got insights. But really what we ultimately want to do is actually build an accelerator program in China, in Europe, and in the US. And we want to be able to scale and support these climate fintech startups, connect them with the financial institutions, connect them with the VCs, help them get customers, so they can increase their success rate, and we can have more impact ultimately. And so just to give you a quick sort of look at the timeline, as you know, this is our soft launch, and we plan to do more of a concerted sort of media campaign sort of in the following weeks. We're looking to build the accelerator over the next couple months, find partners to work with. This is also for the folks on the call. We are open to introductions. Anybody who's looking to support climate fintech startups, we're happy to work with you on that front. And lastly, this is in March 2021, we hope to launch these accelerators in these 3 regions. And so this is sort of the big picture, sort of zooming back out of what we want to do. And we've only just completed phase 1. So really appreciate everyone's time. Thank you, Aaron. Thank you, Yafu, for all your wonderful efforts and putting together this beast of a report. And so happy to share this with everyone. We can move it over to Q&A now. Let's take a look. All right. Problem with all right. So, okay. All right. So we'll start from the top. I'll start from the top. So Philip, so you're having a hard time accessing the, interesting, right? We just tested it. Aaron, you just resent the link. You can go ahead, if you can access that link, there's a download the report button. If you go there, fill in your information, and you can go ahead and download the report. So we'll sort of just get that out of the way.
Let me know if that link I just sent works. Should be in the chat, the most recent message.
Yeah, so here, I'm just gonna go ahead and share my web page, and then you can see sort of where you can go ahead and download this report. So everyone, so this is we didn't mask it with the bit.ly URL. It's neurogenesis.com/climate-fintech-report. And so you can go ahead and sign on to here to download the full report. But let's get into questions, Aaron. So what do we have? First one. All right, so this one's from Philip. He's interested in the difference between a platform and a tool, and also about what is the process of integrating AI into either, how does one do that, or do you hire someone, do you buy modules? And so, Aaron or Yafu, can you speak on that? What would you say is the difference between a platform and a tool? sort of as it relates to sort of the applied technologies and the frameworks that we mapped out?
Yeah,
Aaron, you can answer the first half and I answer the second half.
Yeah, I think I'm going to probably throw both of them at you in a second, but in the context of our report, we didn't define platform alone so much as platform marketplace. And so in that context, a platform marketplace is a two-sided marketplace where you're exchanging goods and services, and there's buyers and sellers, and there's supply and demand, which is facilitated in a digital way. A platform, I think, has a wider definition, and I'm afraid to define that inaccurately. Maybe Yafu, you have an idea of that. Just as far as AI and the implementation of it in business practices, I know that there are engineers who are trained now in specifically leveraging artificial intelligence, building algorithms which learn from themselves, which improve upon themselves. And I'm sure that those hires are not cheap. There's this idea of machine learning, which is a subset of artificial intelligence, as well as natural language processing. And Yafu, you can add to that.
Yeah. I mean, the most widely used subsector of artificial intelligence is definitely the natural language processing, which is used to process the unstructured data to a structured data, as well as extracting information from images, as well as other sources, so that you don't need a human to do the sorting. And that is widely used in climate fintech because many of the emission informations, the environment information is contained, is in the traditionally in the voluntarily disclosed corporate social responsible report, and those reports are usually in the form of PDF or in the form of images. So the AI can extract that automatically, and also so like information from the website and from other sources, also from the satellite. Now you have a more complicated image of the satellite image. You wanted to use the AI to analyze that, and then the machine learning really you feed data to the model, and the machine, and you kind of train this model, and then it comes up to causal relationship between these emission and factors to the return or risk of this underlying asset, the performance of your portfolio companies. So that's how it usually works. And definitely nowadays, these AI experts are not cheap. They are expensive as well. But compared to like you have a bunch of teams, dozens of workers working on this one project, it is still less costly.
Thanks, Yafu. All right, we have another question actually from the beginning of the presentation. Bob from Houston, Texas. Why is climate fintech any different from other financial technical investing or investments?
Let's see if I'm muted. No?
Aaron, do you want to take this one?
Yeah. Investing, I guess traditionally there's a process. There's also different approaches to investing. Value investing, which is looking for cheap opportunities. There's factor investing, where you consider the health of a company, the balance sheet, the momentum. When you talk about technical investing in that sense, those are the sorts of components I think of. We also want to make a nod to financial product innovation. So things like the solar revenue put or a proxy revenue swap, those are not technologies or digital technologies anyway, but those are innovations. Those are financial innovations which catalyze decarbonization. And so we do have a section for that here. If you look on the left side, second to bottom, InsurTech and financial products. And so we do believe that those are an important piece of this puzzle and ecosystem. There's a wonderful organization called The Lab, which does a lot of financial product innovation, and those innovations have led to over $2 billion in capitalization of clean energy projects. So encourage you to check out The Lab. Really interesting group of organizations. But hopefully that answers your question. You know, the focus for us in this investing category was the use of these digital financial tools, the use of these applied technologies to improve decision making, to synthesize data, to build a bucket of stocks or loans based on more climate conscious decisions and inputs from the natural world. So hopefully that answers your question, and happy to talk offline as well.
Thanks, Aaron. It looks like we don't have any more additional questions. I want to give it a couple more minutes. I've got my eye on the chat here. Does anybody else want to pop up a question?
If anybody is asking a new question, I'd like to add one here, something I haven't covered in the presentation. So some of you might be interested and curious about why China has fewer climate fintech than other regions, despite and China has the largest renewable market, and also its fintech innovation is leading in the world in some ways. Like it has the fintech giants like Ant Group and Tencent, but why they have fewer climate fintech? I think there are a few reasons. First of all, because in other regions, the business models such as climate crowdfunding and peer-to-peer lendings are important business model and have a lot of startups in other two regions. However, like peer-to-peer lending, crowdfunding were cracked down in 2007 because of a lot of fraud activities happening in China. And secondly, it's about the blockchain. So like energy, clean energy, or other form of a climate-related activity, tokenizing is not encouraged by regulators in China. However, that is very encouraged in Europe. So blockchain is only used to support the transaction within the financial institutions with a license. So that's why both in this most important innovative areas, there are a lack of the startups in China. So that really reduces the number of climate startups in China. And thirdly, I think it's because a degree of awareness of climate change. I think the Europe and US is leading that because we observed the climate strike early last year, but there's little awareness of that in China. And also the development, I think it's also about development of fintech industry itself, because now there are these fintech giants has now dominated the market. It's hard for the fintech startup to grow in this market condition. If you ask about a VC, you have a special division for fintech. Probably not many of them have nowadays. But if you ask them like 3 years ago, probably every renewable VC will have a division to specifically invest in fintech. Hopefully, I answer cover that part.
Great, thanks, Yaofu. Philip has a question regarding how will you select companies for the incubator and what benefits do you expect to provide? So Philip, happy to answer that. So just to give you a little bit of more background, sort of just on NeuroGenesis and type of programs that we run, we as I mentioned earlier, we do early stage and later stage companies, and the needs for these companies are all very different, which translates into different benefits and different offerings for different type of programs. So just to give you an idea, we have grant-based programming in California that's focused on California early stage pre-seed to seed clean tech startups. We go up grants to up to $150,000 to $450,000. And we also run a 6 to 8 month program with mentors. Another program that we're currently running with LG Chem and Hyundai Kia is for early like mid-stage companies that are sort of technology readiness level 4 to 6 to be working with customers such as LG Chem, such as Hyundai Kia on the next lithium-ion battery or the next cathode-free battery. And so that type of offering is different. It's an offering of POCs, proof of concept projects. And so typically LG Chem will sponsor up to $100,000 for a POC. That's great for the startup because they can prove their technology with a leading battery manufacturer. And so that's just all to say that different programs, different offerings. Now, specifically for the Climate FinTech Accelerator, we just finished phase 1, as you know. We're sort of building out phase 2, but this is also really comes down to what the market needs, what the customer needs are, and what are the startups, what are they looking for, and how we can support them. And so it's going to be different in the US, in China, and in Europe. But ideally, we find a financial institution or a corporate partner that is willing to work with early stage climate fintech startups on an integration project where they can open up their APIs and their data sets and be able to test or pilot some of those technologies through pilot projects and ultimately to investment. But oftentimes with these financial institutions, a POC project is sort of the first step. And so can't say definitively what the offering is yet, but happy to chat offline about the various programs that we offer across the entire sort of clean energy ecosystem. Philip, I hope that answers your question. Let's see, how are we doing on time, guys? Let's see, 1:23. We'll leave it a couple more minutes for questions. All right, Philip, happy to chat with you. Thanks for the question. All right, I'll mark that. So just to finish it off, we have this report. I'm just going to give you a quick snapshot of the report. You can go ahead and download it off the website. But here it is in its sort of entirety. As I mentioned before, it's sort of not a short report, not to be read in one sitting, but our first attempt to try to cast a wide net to cover a very interesting topic with lots of potential. And so happy, thank you so much. Aaron, Yafu, any last comments?
No, just feel free to reach out. Thank you for everyone who contributed, and looking forward to building what comes next.
Yeah, thank you everyone for your interest in this emerging ecosystem of climate fintech, and I hope everyone can contribute to this, and feel free to contact us if you have any questions or wanted to involve in the future. Thank you all.
Awesome, Yafu. Aaron, thanks a lot, guys. All right, so this is our official sign off. Olivia, I guess, all right, thank you for Olivia, I'll pass it back to you.
All right, thank you very much. Great content, awesome. Looking forward to reading the report fully. I've just seen snippets of it, and we will have another event this evening with the same content. So tell your friends. All right.
All right, awesome. All right, signing off now. Thanks, everyone.
All right. Good night. Good morning.
Bye.
Bye.